We are, as Surabhi said, 35 points away. So, yeah, I mean, 19,964 is where we are at.
20,000 on the
right
Nifty.
Yeah.
We can finally say it, after a wait of 50-plus sessions, we've traversed the distance, traversed the journey, and the 20,000 mark, the next decade, the 20,000 decade is here.
All milestones are good, and particularly a happy occasion when the milestones are on the positive side.
I think this is time where, yes, on one side we should celebrate 20,000 Nifty, but please remember that this is also time to exercise some amount of caution.
The Nifty has crossed the 20,000 mark for the first time. It's taken the Nifty 52 trading sessions to surge from 19 to 20,000. This is the fifth fastest 1,000-point surge on that index. Just last week, the Nifty 50 was under threat to fall below 19,000, but it staged what a strong recovery. The mid-cap index too posted another record high. Hello and welcome to our special coverage, Bulls Charge Ahead. I'm Reema Tendulkar, and with me is Prashant. Prashant, a milestone day, a momentous day, 20,000 for the first time on the Nifty, closing just shy of that level.
Oh, absolutely, Reema. So done, right?
Done.
20, and I think we will, I think, do another Bulls Charge Ahead, what, 21? Or 22.
And how many sessions will it take us?
You know, they say that when markets make new highs, right, sometimes gains pick up. And we've seen that with the small and mid-cap part of the market where the pace is accelerated. Every week we're now adding 4% or so. So who knows? Let's just quickly, let me just quickly tell you, put out a few data points, nothing else. But, when you talk about the Nifty, what are we really talking about? It's made up of stocks, it's made up of sectors. And I think it's a good time to highlight the composition of the sectors which make up the Nifty. And I got the latest out. Financial services is 37% of the Nifty index. IT is 14%, right? There's oil and gas, which is another 11%. FMCG is 9%. Autos is 6%. And then there is, 4%, 3% in various sectors spread across. Power, there's utilities, construction, chemicals. But those are much smaller. But these are the big ones. And the largest of the two are financial services and IT, as you can see on your screen. The point is, these are also two sectors which have actually not really participated in any meaningful fashion since this move began from late March. They've participated, and the contribution plate will pick up and to what degree, but nothing big, right? So take a look at this. The Nifty's moved up 15% from the 31st of March this year. So that's when the rally actually began. Reliance has added 13%. This is in percentage terms. ICICI Bank, L&T, ITC and Bajaj Finance are the others which have sort of rather contributed the most. It's well spread out. It's not concentrated in any one large area at all. So well distributed in that sense. Look at valuations as well. We're at 20K, but on a one-year forward basis, we are trading at 18.5 times earnings. This is Bloomberg consensus. The last 10-year average is about 17.5 times. I mean, you could look at the average, you could look at peaks. For example, I looked at what the Nifty was trading at the peak of January 2008. We were at 19.7 times, 1 year forward back then, right? So suddenly it looks different. But on a 10-year average basis, we are slightly above now. Nifty's gained 15%, but I think, just to kind of wrap this up, the gains in the mid and small cap part of the market have been much larger. The mid cap index is up 38% from the 31st of March against Nifty's 15%. And the small cap index is up 44%. So you're looking at humongous gains on these, broader market indices as compared to Nifty's 15%. And perhaps that is the reason why many market veterans are now calling that perhaps it's time for large caps once again. So while 20 done, perhaps there is more coming from here on out as well. Let's actually put this to Prashant Khemka, White Oak Capital, who's joining us, manages one of the largest pools of money here in India. Prashant, thanks very much. Good to have you with us here on the program. And I want to just start with that, use this opportunity of Nifty at 20K to ask you that question. Are you also of the view that maybe, the weight will tilt in favor of large caps here? And once again, that's the part of the market where you'll tend to make over the next, say, 6 months, 12 months, more money will be made in that part of the market. Your thoughts?
So first of all, thank you, Prashant, for having me here on the show on this day. And thank you, Reema, as well. So I do think that, small caps are influenced at this time by the massive inflows that the industry has seen, the MF industry, or even globally, the money that has come in, that has had a influence on the small cap stock prices. So the 45% odd rise that you showed just now from March 31st, that obviously fundamentals have played a role as well, the improving fundamentals, but there is a bit of an impact of the flows, which is not fundamental and hence does represent a concern in the small cap and the micro cap segment. Because that's a segment of the market where liquidity is challenging. And if you have a flow as large as we've seen over the last 3, 4, 5 months, it can push up prices. But on the other hand, large caps, I don't think we've seen anything of similar kind. And so there the prices are, in our view, more fundamentally determined. And if you add the two together, then yes, going forward, we do think that there's a possibility a certain section of small caps might come under pressure in any kind of a downtick on the market. I know we haven't seen much of a sustained downtick in some while, but these always come when they're least expected. And under such scenario, you might see that segments of small cap buckle, whereas large caps might hold a lot better and rise from there. So to your question, yes, at this point in time, I think the relative outperformance of small caps would be difficult to sustain going forward.
Prashant, hi. Would you want to elaborate on which section of the small cap universe could buckle under pressure? And a follow-up question, how have you played this rally that we've seen in the last 6 months in terms of the large cap till the mid, small cap? What have you bet on?
Certainly, Reema. So first of all, the second part of the question, we are always structurally greater allocation in our portfolio to small and mid caps, not because we believe small and mid caps would outperform large caps over time. Over time, they all tend to perform more or less in line. But we do believe for a good investment team, a strong investment team, the alpha opportunities are higher in small caps and mid caps. So even if these different market cap segments perform in line, if alpha opportunities are stronger in mid and small, then over time you can generate more returns in that. And we would remain so going forward as well. Notwithstanding anything that I said, we would still have more allocation in mid and small. Now, within mid and small, particularly the small and micro, I would say, to your first question, which segments have seen extraordinary rise, which could be beyond what fundamentals might justify. And again, we don't have very strong view on this, but we do think the deep cyclicals, some of the industrial and infrastructure and capital spend oriented companies, be it in engineering and construction or anything related to defense. Again, I'm not saying for a second that all names in these segments are blown out of proportion, but yes, there are pockets within these segments which are stretched. And if you add to that some leverage, financial balance sheet leverage, those kind of stocks have done even better, as you see, when there are strong rallies in any segment of the market. So I would be more careful and be more concerned in some of these deep cyclical segments of the market that I just mentioned.
Prashant, but would you say that both the investment cycle in specific sectors in the economy, it's what we're seeing is perhaps something different? Like take railways, for example, right? Roads, of course, has seen a sustained momentum for some time now, for the last many years. Railways perhaps is newer in that sense. Defense, indigenization is a big thing. So there is real stuff happening. It's just that markets tend to overdo it. Is that the complaint, really?
Exactly, Prashant, exactly. So it's not that there is no underlying fundamental improvement for this sector. The fundamentals are definitely very positive, and you are going to see some of the strongest top line and bottom line growth in these segments. But there has to be some fundamental valuation discipline as well. It's just like in 2007, 2005, 2006, 2007 time frame, we all agreed, everyone knew that a billion plus Indians would need a place to stay. So the demand for real estate is always going to go higher, and there's only so much real estate, there's only so much land in the world. Land cannot be produced anymore. And so the real estate prices, but if you see the stock prices back then, went way ahead of what those fundamental expectations were. Obviously, in case of real estate, the fundamentals also didn't play out down the road as were expected, which with any sector. Even if those fundamentals were to play out, there is risk that the valuations at this time might be extrapolating for far too long the high growth rate in these segments. These are ultimately cyclicals.
So the last 18-20 months, Prashant, belong to these deep cyclical names, which have done very well, many of them in the PSU names. Cycles of late have started turning out to be shorter. So there is a possibility that this cycle comes to an end and the market latches on to a new theme. If you had to bet on 2 or 3 themes that the markets could look at for the next, say 18-24 months, which ones would it be according to you?
Certainly, Reema, we don't have a style of betting or thematic investing or betting on themes where we structurally find great opportunities over the last, let's say 16, 17 years, and we believe that would remain the case going forward as well. You can think of these as multiple themes, maybe more than 2 or 3. So private sector financials would be one that I would point out. Obviously, Prashant just mentioned 37% of the market of Nifty is financials. Most of it, probably 80-90%, is private sector financials, and there you can get the entire gamut of large cap, the largest of large cap banks, to smaller or mid cap NBFCs, and there are non-banking, non-lending financials as well, be it insurance or other capital market intermediaries of varying sizes within small, mid, and large. And I think that's you can call it a theme or several themes within that 37% of what is represented in the market. And that is structurally, our team has found great lot of opportunities in this private sector financial. So that would be one. I would point out consumption as another one. Structurally, you can always find opportunities, be it staples or discretionary. So discretionary would include likes of automobiles, retail, media, and so on and so forth, besides the staples. So there the team continues to find great lot of opportunities, has found over the last 16, 17, in my professional career, I found over the last 16, 17 years, and here at White Oak, the team has continued to find always some great opportunities there. There can again be some sub-themes you can think of, greater rising spends on certain categories of consumer discretionary items as per capita income rises from 2,000 to 3,000 to 4,000. Obviously, we are going to consume more chocolates, or you'll see faster growth in chocolates than in toothpaste. What is more injurious to your teeth than what is good for your teeth. So those kind of sub-themes could be there within consumption as well. And then you have some of the other sectors that Prashant was mentioning. Obviously, in IT service, a humongous wealth creator over the last 20, 30 years. Despite the challenges it has seen over the last 12 months to 18 months, I would say, given the slowdown in the global demand environment, there are large number of great investment opportunities that our team is able to find in IT services, and also then in capital goods sector, industrial sector. The teams do very well and continue to see opportunities there.
Prashant, absolutely well put. By the way, there are visuals coming out of the National Stock Exchange that you can see the NSE CEO MD Ashish Kumar Chauhan ringing the bell, not opening or closing, but ringing the bell for the Nifty hitting 20,000. I think there is a cake, Reema. There is a cake. There's
always a cake, right? Celebrations at NSE, cutting of cake, the ringing of the bell as they celebrate this momentous milestone day when the Nifty has hit that 20,000 mark for the first time ever. clocking in a stupendous rally in the last 6 months. From the beginning of the year, the Nifty has rallied about 15-16%. The small cap index has rallied 45%, while the mid cap index has rallied close to about 40%. In fact, let's detail out this journey from 19,000 to 20,000. Nigel is here with the top gainers and losers.
Well, that's right. The Nifty is at around 20,000 odd, and we have done this move from around 19 to around 20,000 just in 52 sessions. Remember, there was a painful move between 18 to 19,000, and I say that because the Nifty took 425 days. But in the past, we have done this 1,000 point at a faster clip. That's between 16 to around 17,000 when we did it in around 19 sessions. Well, the Nifty would be up close to around 5.5%, but take a look at individual indices. Whether you look at the banking space or the Nifty PSU index, well, that's moved very, very well. And when the markets find their momentum, you have realty and metal stocks that do pretty well. And one end up has been held on because the IT index, that's been rock solid. It's outperformed the Nifty as well. Well, in this duration of close to around 52 sessions, what's outperformed the Nifty has clearly been the mid cap and the small cap indices. Big returns in there. Now, let's focus on the top Nifty stocks. In this period, from the end of June till date, well, you have NTPC, Coal India, otherwise boring companies, they've done very, very well. Cipla as well, there are hopes that there will be a deal that will close out. That's why that's up by more than 20%. And domestic facing themes, L&T, Tata Steel, Adani Ports, they're up between 17 to around 20%. So very, very good run is what we've seen on some of these frontline Nifty stocks. But there have been some underperformers. UPL, Britannia, HUL, all three of them, well, there have been relative underperformance in this market that's been running along. But I said mid caps have done well and PSU stocks as well have done well. So just combine both of them and you'll see some of the top gainers from the broader markets have been mid caps that are part of the PSUs as well. So you have IRFC, Kochi Shipyard, MMTC. They're not satisfied by this 20, 30, 40, 50% returns. They're up between 100 to around 160%. Pull up a few more of those names from the broader markets which have done very, very well. Idcon, Marscon Dog, SJVN, all of them gaining big time. Throw in there Jyoti Laboratories as well, that is up more than 70%. But a couple of stocks have underperformed, but that's company specific. Delta Corp on the back of the GST hit that they got, and Vedanta Limited, because of problems at the promoter entity with regard to their debt servicing, that as well has been an underperformer. But to sum things up, it's been a good run. 52 sessions, the Nifty moves from around 90 to around 20,000 odd. Will we be setting our sights on 21,000? Time will tell. Okay, well, Nigel, very interesting journey on the Nifty as you highlight, as you detail out. Prashant, we'll thank you here for joining us. Appreciate your time as always on CNBC-TV18, and here's to many more chats along the journey as the market continues to do well. Thank you very much once again. Well, we'll take a quick commercial break here. On the other side, we discuss the rally in the broader markets. Stay with us. We are back in just 2 minutes. Back in just a bit.